This is more anecdotal, and this is kind of based on myself being in the marketplace, speaking to developers every day, speaking to investors every day, often partnering with competition, mortgage brokers, solicitors, accountants. I've got a good pulse on the market in terms of what's actually happening out there. And what I'm seeing in 2026, from COVID onwards, really, from 2020 up to 2024, the UK was flying. We were some of the biggest sellers for, key developers up in the Northwest, particularly in 2023. But the past 18 months, 2 years, it's slowed down significantly in the UK. The demand has softened a lot, and developers have been stretched on costs of building, regulation. There still hasn't been really any amazing planning changes, so they've still got a lot of hoops to jump through. As a result of that, less products are coming to the market. So the ones that are on the market, they do, they might see a higher premium if there's less competition in that specific local area. But what I'm really seeing out there at the moment is investors are in the marketplace. So there's a number of ways we measure that. So one, as I say, we've got a network of over 30,000 investors. So as you can imagine, our job is to market to those investors, add value, introduce products, understand where they're at, what they're considering, what their mindset is, what's the sentiment in the marketplace at the moment. And basically, our job is to find investors that are active and are willing to transact. Now, we are generating a lot of interest from our database when we have the right product. Okay, so we can send emails out, WhatsApp sends, and if the product is good, we will generate people that will put their hand up and say, yes, send me the full information on this. On the surface, this looks good. I'll have a deeper look. So there's a big segment of investors that are sitting there on cash, waiting for the right product, in my opinion. And that's not just UK based. That's, a lot of the Middle Eastern and Far Eastern guys that make up our database as well, and African. So, demand is there. The other way we measure it is via new traffic. So when we're advertising on the likes of Google, Instagram, Facebook, this is how we're reaching consumers, so to speak, or property investors. And we measure that via the cost per lead. Like, how much does it acquire me to get an investor's details and then market to them and ultimately transact with that investor? So they're kind of the metrics where you can get a sense of how hot the market is and how much demand is in the marketplace just from our own internal information and operational circumstances. Whereas that doesn't count speaking to other agents, speaking to mortgage brokers on the ground, how busy are management companies, what are the yields or what the rent is being achieved in certain places at the moment, et cetera, et cetera. So that also gives us a good understanding. So by accumulating all that data, in my opinion, what's happening at the moment is, one, investors are not jumping at any opportunity. We used to launch a product in 22, 23, any city center, and you'd have people, as long as this price was reasonably good, you'd have people plowing money into the market. It was very active. Now that just doesn't happen. You can't launch a product 2 years out with an average rental yield, an average deposit structure, an average specification in an average location and expect investor demand. You just won't get it and it won't sell. Or eventually it will sell, but it will be a slow burner. So if a product, however, is priced well in a good location and the investment fundamentals are there, then you will have the investor demand. Simple as that. So that's what I'm seeing at the moment. Price sensitivity is obviously very, very strong. People are not afraid to ask for discounts, push developers because they know the overall macro sentiment isn't as hot as it was a couple of years ago. And the other thing I'm seeing as well is a lot of investors moving towards fixed return deals. So you might have seen all these investments, social housing, HMOs, rental assurances from developers offering, 8, 9, 10, 11, sometimes 12% fixed return. And you've got these investors that have just been sitting on cash for 2 years. And if you're saying, look, I'll give you 10% for 10 years, give me 150 grand, then a lot of people do that. It's the fastest selling type of asset in the marketplace, without doubt. Ready property with a guaranteed return is the fastest selling. So we are getting a lot of attention on that. Whereas before we might have had people that are putting, 70 grand into an off-plan investment and just roll the market because the appreciation was so aggressive. They didn't really have to do much, put in their deposit level, wait a couple of years, bang, that's a 80% return on cash invested over a 2-year period. That doesn't really happen as much unless the product is perfect. So yeah, long story short, without waffling too much, from what I see in the marketplace, investor demand is there. but it's only there for the right products, which has to be structured correctly and brought to market with good marketing, with good incentives, and with good fundamental structure and investment merits. If you've got that, then the product will likely sell at an appropriate pace. If not, then it's just going to sit on the market. And there are developments out there that's happening with right now. And then the other thing is a lot of investors are moving towards fixed income investments where they want that certainty. They want that predictable income month in, month out. They don't want to deal with service charge rises, with management fees, with now the Renters Reform Act, providing less certainty than perhaps it did before. We've had investors say specifically, get me a guaranteed return because of the tenancy agreement changes that are coming into the marketplace. So yeah, we're seeing it firsthand.